All right. Hello, guys. We are up for Traders Talk and welcome once again Tuesday evening and glad for you guys to be with me today. Yeah. So stocks are obliterated. Yeah. So everything is crashing down and the bears are back and very strong. Very strong bears coming back. S&P dropped about 150 points yesterday, about 3% and of course even the Nasdaq is even worse, 544 points, yeah, just in a day, 4.6%. And of course this we do not count those coming on from the last weeks, right? From the last week, of course if we add that in, it is very bearish market. Okay, yeah, hi, I'm Ming Hon. If this is the first time you joining us, this is a Traders Talk, and we're here just to share with you our thoughts on the market and also to give some insights on trading the stock market using options. Yeah, and if this is your first time here, give me a thumbs up, and glad for you guys to be here with me. And of course, for the people who are returning here weekly, and we will follow up with some of the things which we have actually done and trained in the past weeks, so that these trainings will actually empower you guys to become a better trader, to face a bear market and even make more money during the bull markets. Yeah, so market's not so great. Of course, the futures today, it looks better. I think it was actually up about 50 over points, and for the what is that? For the Nasdaq futures was up 50 over points, and of course for the S&P futures, I think it is actually also up about 8 or 9 points. Yeah, so having a little of bounce back, and of course we will also look at the charts today just to see where we are, and basically what is actually expected to come in the current week. Yeah, okay, let me just share. This week there is actually a Fed meeting to actually announce the Fed rate hike. If not mistaken, it's actually on Thursday. Let me just double check. I think it's actually on Thursday. Okay, do you guys see this? Am I sharing the screen? Okay, good. Just let me check. Thursday, Tuesday. Okay, if you guys want to actually know about what major announcements are there, or what major activities within the market, right? You can actually go to this site. Let me just make this bigger. Where am I? Let me make this bigger. Okay, I cross over to here. Where is this? No, this is the, okay, too many screens are on, so I need to actually find back where my screen is. Okay, good, found it. Okay, so this is actually the website, forex forexfactory.com. Yeah. So if you guys want to know what is actually happening, you can actually go to forexfactory.com. And basically this site will actually show you daily what are the major announcement which is actually going to be made by most countries, yeah, the major countries, Japan, Germany, UK, and then US, Canada, Australia, yeah, so New Zealand included. So this is actually a site where we see what major news there is coming. Okay, so today there is actually a 8:30. There's actually a PPI, yeah, and this is actually coming on 8:30. And of course, the US retail sales is coming on Wednesday. Yeah, retail sales is coming on Wednesday. And then on Thursday is the big day. Thursday is actually the big day where we are actually going to have the Fed fund rate announcement. Yeah. So of course, the earlier time they are actually talking about 50 basis points and increase, and of course because of the high CPI inflation rate which was announced last Friday of 8.6%, then of course 50 basis point is no longer what they are actually, the market is not expecting that anymore. They are expecting a higher rate of 75 basis point at a minimum, and of course it was 100 basis point. Yeah. So of course because of this expectation, so the market had sold off right from Friday itself after the CPI announcement and continue up till Monday. And if you look at the S&P, basically the charts have actually blown all the support which we were actually talking about, the support levels, which was basically around these levels, about 3,850, yeah, 3850. Yeah, and of course the lower one was around 3,008. Yeah, so 3,008 was breached very badly, very deeply yesterday. What is this? Yes. Okay, so it was breached. You can see here it dropped quite strongly down below all the lowest support levels. I mean, basically, I would this was previously the lows, right? The lows, and coming right now, it is actually again forming lower lows, yeah, lower lows, and it's now actually testing the next level of lows, which is basically at about 3,600 level. Yeah, this is another level where we actually need to look at if it actually comes down to this level. Yeah, so for the time being, it seems there might be some oversold from the reaction. It might top up a bit, but of course, because of the Fed rate hike coming Thursday, even if it actually goes up today, I would expect come Wednesday itself, right? Wednesday, or even the earlier part of the morning of Thursday market, it will probably come down a bit because of the anticipation or the fear of the markets. Yeah. So for the time being, markets are mostly risk off right now. Yeah, risk off right now. So if you are actually holding any long positions, you actually need to do some protection for your long positions for time being. Yeah, so we will also speak about protection. How do you actually protect some of your long positions in shares especially? Of course, if you are trading, then of course the long positions are already very deeply at risk depending on when you enter it. Yeah, if you have actually entered it in anticipation of what is that bullish run, continuation of the bullish run here, I think most of the long trades which you have would probably be deeply in the red, yeah. Okay, so you can actually do some hedge or just some protection on long stocks position, while waiting for the best to actually go away. Yeah. Okay, great. So if you guys have any questions, please post on the chat. Then throughout, I would actually go and run through them. Yeah, actually go and run through them. Let me see this. Okay. Okay. So this is S&P, Nasdaq is also the same. Nasdaq is also the same. It has actually breached again all the low levels in the past. That was actually about 11,500 points. Right? 11,500 points. It has actually gone down all the way to about now 11,288 points. Yeah, to 11,288 points, and of course from the highs, it has actually came down this year about 26%, yeah, 26%. Okay, so not so good for long traders, short traders, of course, you will be celebrating with the bears, yeah, with the bears. Okay, let's see. Yep. Okay, coming back here, what else? Okay, so S&P Nasdaq, we'll cover that, and then of course, when I say actually, we will actually go through two things. First is, of course, what are the so-called trades which you can actually go through during huge down days. I would say huge down days. There are actually some trades where you can actually profit. That means certain stocks would actually go up when the market goes down. Okay, and who would like to actually know what are the stocks which are guaranteed to go up when the market is down? Guaranteed, I would say guaranteed means 100% guaranteed it will go up during down days. Who would actually like to know? If you like to know, give me some thumbs up and love, or better still, share it with your friends so that more people will actually know what are the stocks which will guarantee to go up during down days. Yeah, so that you can actually get some of those as a so-called hedge, or at least not to make your portfolio so painful, only see red and there's no greens, right? Yeah. So who's up for it? Any of you guys up for it? Oh, no one. Okay, all right, go. There's one at least. Okay, all right, great. So these stocks which we are talking on is actually an ETF. It's actually an ETF, and basically there are a couple of ETF. We call these inverse ETF. Okay, if you guys have actually heard of inverse ETF before, if you guys have not heard of inverse ETF before, maybe give me a thumbs up so that I can see that you guys have not seen it. Maybe I put on my Facebook on my phone first so that I can know what's happening behind the scenes. Yeah, behind the scenes, whether there are people putting on questions, so at least I can actually notice. Yeah. All right, so the inverse ETF is actually inverse. Basically, inverse means that it will actually do the opposite of the S&P or even Nasdaq or even the Dow Jones. Yeah, they will actually do the exact opposite. And there are actually many inverse ETF in the market. The one which I would actually like to share with you guys today is the ProShares. Yeah, is the ProShares Ultra Short S&P inverse ETF. Yeah, and this is actually two times inverse. Two times inverse means that any 1% change in the S&P, this ProShares Ultra Short will actually go up by 2%. Yeah, and of course, if you look at this, right, this chart here is actually on the ProShares. Currently, it's actually trading at 51.58. 51, 58, and basically yesterday itself, it has actually jumped from $48 to $52. It has actually jumped by about 4%. It has actually jumped by, so not 4%, sorry, $4. It has actually jumped by about $4 yesterday because it opened gapping up yesterday, and of course, percentage-wise, it is actually up by 7.72%. 7.72%. So if you actually look at S&P, right, S&P is actually down by 3.88%. 3.88%. Whereas the SDS is actually up by 7.72%. Yeah. So, so basically, like I said, yeah, Ronnie, how does this ETF works? It works on the inverse side of the S&P. In the case of SDS, it works on the inverse side. Means that if SPX go down by 1%, SDS will actually go up by 2%, 2 times the movement. Yeah. So of course, this is a leverage ETF, and of course, if we trade this ETF, how we can actually trade it? We can actually just trade it through options. Yeah, you can actually go through any platform, check the ticker SDS, and you can actually trade through the options. As I know, this SDS gets settled daily. That means basically, normally when we trade this, we would actually trade it either same day, or even if we don't hold it for long. Basically, that's the thing. We don't hold this kind of ETF for long. Basically, it is mainly for hedge purposes, or basically short-term gains. Like I said, in your portfolio, if you're actually making some losses, and if you want to have a couple of $100 to actually offset the temporary pain, which you have, not so temporary, because now it's about 6 months pain already, right? quite painful. Yeah, but temporary means as in that day, if you see that the market has actually a huge a bear rally, rundown on the prices, a strong rundown, you can actually take this SDS options. You can actually trade on the options. Yeah, and then basically once you are up $1 or $2, because the movement on a strong day, it can actually go up a lot. Like yesterday, it went up by $4, and the day before, that means on last Friday, 47 to 48, it went up by another $1. And of course, on what is that? On Thursday, it from 43 to 45. So basically about $2. So if the S&P is moving around, that means going down by about 1% and more, then is highly likely that this SDS movement would be actually quite big. But of course, if you look at the time from last week, right? Last Wednesday, no, last Thursday till now, basically it has actually gone from 43 to $52, 43 to $52, $9, almost about 20%. Yeah, 20% movement up only in a few days time. Yeah, so of course, SDS is tracking the S&P 500, and of course there is also in ProShares Inverse. ProShares is the company which is actually, or the fund which is actually selling this ETF. Yeah, ProShares is the company selling this ETF, and of course for the Nasdaq market. Basically they track this using what is that? QID. Yeah, QID is another ultra short inverse ETF, which basically tracks the QQQ on the inverse side. So for example, yesterday QQQ, right? Let's see QQQ. QQQ. Let's put QQQ. QQQ. QQQ went down about 4.6%. Yeah, 4.6%. And of course, if you look at the QID, it went up about 9.2%. So again, two times the movement of the QQQ index. Yeah, as a QQQ ETF. If you look here, right? If you look here, this is actually the QQQ price. QQQ. No, this is not the QQQ. $20. No, something wrong. Let me see. Let me see what is this. Let me see what is this thing here. Delete. Okay, plus QQQ. QQQ. Yeah, okay. So this is QQQ. Yeah, QQQ currently is trading at 275. And of course, yesterday it actually went down by QQQ went down by $13, right? QQQ went down by $13 yesterday, and of course QID went up by yesterday. It went up by 26 to 27, about $1 here, about $1 here, yeah, about $1. But of course, the change is actually about 10% change. Again, QID, you can actually look at trading the QID options. Yep. Mostly Pro Shares. Is going on all these leverage ETF, which is inverse. I mean, there are also some other inverse ETF, which even go up to three times. That means if QQQ move one time, they can actually move three times the other way. Yeah, but of course we also look at liquidity. Liquidity of this ETF. Yep, and because I said we don't hold for long this type of ETF, and mainly we only trade it short term for temporary strong movement in the S&P or in the QQQ or even the Dow. Yeah, so these are the ETF which we can actually look at. But of course, today when the market is actually just bouncing back from a strong downtrend, right? Then of course it is not so profitable to actually trade on this today, unless the momentum for the downtrend is actually still strong today. Yeah, because if you look at the let's say indicators, stochastic. If you look at the stochastic, of course, it's already quite high for the QQQ, right? I think QQQ would also be quite high for QQQ. So where's QQQ? Yeah, stochastics plus stochastic. Stochastic. Okay, so stochastic, is already oversold below 20, right? It's already below here. So of course, it might go down further, but of course, maybe the momentum is actually not that strong, and of course, when the momentum is actually not that strong, then of course the opportunities for a huge run up for the ultra short ETF is less. Yeah, is less. Okay, so this one, there is actually one more another bonus for you guys. Another one is actually what we call QID. QID is already the other one is DXD. Sorry, QID is for QQQ. No wonder the QQQ keeps popping. Yeah. DXD is actually the pro short pro short ultra short for this Dow 30. Yeah, Dow 30. Again, if you look at Dow 30, this ETF, right? Yesterday itself, it has actually gone up by about 5.5%, and of course, the Dow Dow, Dow 30. What is the ticker for Dow 30? Dow 30. Dow 30. Dow. DJI? DJI is the Dow Jones Index, right? Okay. So no, I don't look at Dow so much, so I do not know if there's a ticker for Dow 30. Yeah, DJI, yeah, correct. Yeah, DJI. Yeah. It went down by about 2.8%, 2.8%, and the DXD actually went up by about 5.4%. Again, two times inverse position for the Dow. Yeah. So these are the three of the inverse ETF where you can actually trade during huge down days. And please, if you are trading options, okay, please remember these are inverse. Okay, so if you're trading options, please remember these are inverse positions. What inverse position means that uh, 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 when the S&P or the QQQ or the Dow is actually down, right? You need when you buy this inverse, when you trade this inverse ETF, you need to go on calls. Okay, don't go on put thinking that the market is down to go on puts. Yeah, so you need to actually go on calls. You need to go on calls. That means basically buy the calls for the inverse ETF, because the inverse ETF will actually go up when the market goes down. Yeah, market goes down. Yeah. All right. Okay, so hope that you guys, this, if this is the first time to actually hear this, of course, this is actually again a learning process, yeah, a learning process, and of course, even for myself, it's a learning process every day, and all these kind of things, we need to actually consistently learn from the market, so that we can actually become a better trader, yeah, better trader, yeah. And it's never too late to actually learn something new in the markets, because there are actually so many things. Yeah, there are actually so many things. Yeah, and of course, we cannot know everything. And there are also a lot of new things. A lot of new things. Even if you're talking about asset class, right? Asset class like stocks is one. Then trading kind of assets, trading kind of instruments is like options, is actually a trading instrument. Yeah, I would not call it an asset, because it will actually go to zero at one point in time. Yeah, so options is a trading instrument, and of course, if you talk about forex, you go into like you talk about forex, then of course forex is another trading instruments. Yeah, and crypto again is more like, to me, is a trade. Some people call it asset lah. Yeah, but that asset is even dropping much more than the stocks. Yeah, because at the end of the day, those can actually drop by 90%. Yeah, 90%. If you look at the crypto market, right, it is actually quite very brutal. I would say brutal, because only a few days ago, you can see that. Let me share the. Am I sharing screen? Oh, yeah. Let me share. Yeah. So only a few days ago, we saw that Bitcoin, yeah, yeah, Bitcoin was actually at about 30,000, right? 30,000, and of course, today is actually dropping to 20, come about closing to 20,000. Yeah, so another 30%, just a week, it actually dropped by 30%. Of course, in the Nasdaq market, probably 10% in a week, 10% in a week time. That means from last week until now. But of course, for cryptos, in a week, basically it dropped 30%. And of course, here is only a month, right? a month, basically from 40,000 now is to 20,000. It dropped by 50% in a month. Yeah. So of course, if you are into different type of class of assets or trading instruments, then you need to actually have the heart to take this kind of uh, uh, down days or bear days lah. Yeah, if you're actually trading this. Yeah, and what is this? ETH. ETH, of course, again, no, this is ETH. Yeah. So ETH was actually 1,800 just last week, and currently is 1,001. Yeah, because I mean it's painful lah. I mean, even for myself, I do not actually trade so much on this crypto, but basically I also purchased crypto in the recent months to actually look at these NFTs, right? Yeah, because as I said, different time you actually look at investing or trading different type of instruments. Yeah, like now, of course, I trade less on the stocks or even the options. Yeah, I trade less on stocks and options. Then, of course, during this time, on the other side of the market, like it's actually the crypto winter, right? We call it the crypto winter. Then we actually move to see whether there are actually values that we can actually get through there. And of course, now because it is actually a crypto winter, then of course there are a lot of NFT projects which are also quite interesting to actually evaluate, because prices of NFTs has also gone down by a lot. Yeah, and of course this is again another type of asset class, a new generation asset class, but it's actually booming. It's actually booming. Yeah, and I just purchased some if last week at about 1,008, and of course now it has actually gone to 1,002, and of course the same like other what is that other crypto, right? Last week I actually thought I did very good buying Solana at 40, and today is actually only about 28. Yeah, so again it dropped by 25% in just a week's time. Yeah, but anyway, like I said, all type of instruments, you would have a certain type of risk, but of course, if you know how to actually monetize, monetize or keep so-called value assets, then of course, at one point in time, these value assets would actually increase. I mean, say in this time where a lot of cryptos or the NFT actually come down, right? Then of course you are actually also buying it in at actually a low price, because there are also a lot of people who are desperately liquidating a lot of their assets, which was previously selling at very high values. Yeah. So yeah, so that is it, and of course these are some of the things which we look at everywhere. Yeah. So for those guys, yeah. So this is one of the recent NFT project which I have actually evaluated. Yeah. So this is actually what we call Binkies, right? Binkies is one which was just launched a week ago, and of course this is one project which we are looking at, like, yeah. So something interesting. Yeah, and of course if you guys have actually received my newsletter, right, then there are also some additional things which would actually do a bit good to you guys, right, which is actually about managing positions. Yeah. So for those people who received my newsletter, in here I actually cover this week rolling of trades. Yeah, I actually cover rolling of trades, because when the current market actually goes against your, say, long positions in long trade positions, right? Then of course you would need to actually manage your trades. Yeah. So of course, in the newsletter, I have actually written down some of the tips and the things on rolling of trades, reasons for rolling, effects of rolling, example of rolling, what is the possible action for you to do, or instead roll the trades. Yeah. And of course, what does it mean for your risk in the trade? Yeah, risk in the trade. So please go through this. I would not actually go through this during the call here. Yeah, but of course, if you guys receive the newsletter, please by all means read the newsletter. Yeah, and of course, if you do not receive the newsletter, just go to the site, right? Just go to the site and subscribe to the newsletter. Yep. So subscribe to the newsletter, and basically this would be sent to you. This would be actually sent to you every week. Yeah, every week. Yeah. Okay, so this will be sent to you. I've put on the link there. You can actually just go to the link and register and subscribe for this. Yeah. So yeah. So this is some things. Okay. Okay. So what else? Let me see. Okay. What else? What else? Okay. Stock positions. Of course. When the market is down, then there may be again some opportunities coming through. I mean, which you guys can evaluate. Yeah, evaluate. Something missing. Okay. I stopped the share screen. Okay, let me put back. Maybe I should actually just cover one or two things which I'm actually looking at. Yeah, looking at to see whether there are any opportunities. Yeah. Okay. So, like I said, a lot of stocks are obliterated. Okay, killed. Killed in the market. There are actually a lot of stocks which are killed in the market. Why is the screen so small? Okay, never mind. Okay, so there are actually a lot of stocks which are actually killed in the market, and of course, one of it is Visa. Yeah, one of it is Visa. Remember, in the earlier traders talk, right? In the earlier traders talk, we always touch on this Visa stock, right? Visa stock, and of course, there are again several times where this stock has actually came to a level, and of course post that it has actually bounced back. Okay, and this level is actually the $190 level. Yeah, which is somewhere around here, and now it's actually coming close to that again, because a huge drop in the past 3 days, 3 days, from $212 to $192. Yeah, so basically huge drop here. Yeah, huge drop. Yeah, it takes them 1 month to actually go back from 190 to 215, and again now only 3 days it actually whacked the 1 month effort off. Yeah, so Visa we are looking at this to see if there are actually any opportunities. Yeah, of course, again, coming from a perspective of trader, or coming from a perspective of investor, it can be different. And of course, if you're actually investing, right? So this is actually a daily, and of course, if you look at the weekly, right, weekly charts, yeah, again, you can actually see it is not 1 2 3. This is the fourth time coming, and it's again bouncing off weekly 200 moving average. Yeah, weekly 200 moving average. Of course, for good stocks, strong stocks, 200 moving average weekly bounce is actually very, I would say, very strong lah. Very strong lah. Yeah, so of course, again, is coming to close to this level. It's actually touching already lah. Yeah, if not here, it's actually touching. And if you look at the previous rounds, right? Yeah, only COVID time it came, and then this was actually in November, and this was actually in March, and this was actually in May, and this is now again June again. So it's like every because the first time the Fed announcement was done in March, right? In May? No, in March, I think. In March, yeah. In March, it was somewhere here, yeah. This one, Fed announcement, Visa sold off. In May, Fed announcement, Visa sold off. In June, again, Fed announcement, Visa sold off. Okay, and post that again, it has actually recovered. Post that again, recovered. Two times March, May, yeah, March, May, Fed rate hike, drop, go up, yeah. But of course, if the overall market continues to drop, I mean, there may also be possibility that it actually comes down further. There is no guarantees, of course, in trading or in investing, but of course, it's already a very strong, how to say, buy-in level. If you want to actually average your cost in to putting a position in Visa, if you have not got one, yeah. How much is Visa PE? You can actually just check through Finviz. How much is Visa's PE? Yeah, and of course, all these are no, Visa. All these are actually available, right? So PE for Visa is 36 times, yeah, 36 times. And if you do a comparative PE for what is that? This is Mastercard, right? No, MA Mastercard is actually about 33. So Mastercard and Visa is more or less the same. Mastercard and Visa is all more or less the same. If you look at other payment ticket payment PayPal, right? PYPL. PayPal is basically about 24 PE, even lower. But of course, PayPal has just gone down and never really recovered yet. Yeah, never really recovered yet. And of course, Visa. At least if you look at Visa, uh, it is not as deep down, and it always recovers. It always recovers up after a huge dip, and many times it has actually bounced up. It has actually bounced up. Okay, so take advantage of some of the free portals. I mean, this would be actually quick information for you guys. Yeah. So like myself, I mean, I would actually trade more, and of course for buying in positions, I would have basically a familiar kind of pool of stocks which I would actually how to say buy in whenever the so-called technical charts, that means the charts actually move move to a certain patterns within the charts. Yeah. So Visa is of course one. Then of course if you go to other ones, right? You can also look at the patterns. This is what, this is Microsoft, right? This is Microsoft. And again, if you look at Microsoft, this is moving at the 100 moving average, right? It is actually now trading slightly below 100 moving average, which it again barely goes down to this level. But of course, for stocks like Microsoft, how to say, it already gave out a warning. It already gave out a warning that its earnings are actually going to be affected. Okay, so of course, if you go into Microsoft right now, of course there might be chances when they further announce earnings later on, right? I mean, it might even go down further. There are possibilities, but of course we would not know. And of course, if the so-called price patterns, if you actually go on a consistent basis of buying in based on the so-called price patterns, right? Then of course, it moves to a certain level, then it just gives you a so-called signal that you can actually put some in. And of course, if you are scared of the so-called weaker earnings coming on, then of course you just reduce the size of your buy-in, so that if it comes down later, you can actually cost down, average down again. But of course, if it runs up, if it runs up from here, then at least the so-called past signals, when you are following, it actually gives you this kind of so-called returns. Yeah, this kind of returns. Yeah, and you don't lose out. You don't lose out by waiting too long. Yeah, if it comes down, it's fine. Generally, stocks like this, eventually it will actually go up back. Yeah, historically, even if you look at the past 10 years trend, it is only way going up. Yeah, I mean, if you scale down, then of course the dips are not felt if you actually hold it long enough. Yeah, are not felt if you hold it long enough. So of course, these are some. Of course, the last week we spoke about Google, right? Yeah, last week we spoke about Google, and of course I said don't buy in first, right? Let it come down, right? Yeah. Last week we spoke about Google, and I mentioned don't buy in first, let it come down. Yeah, and of course this week it came down. Yeah, last week we were actually talking about daily chart, right? Yeah, daily chart. Too many drawings here. Let me clean it up. Yeah, last week we were actually talking about the stock split of Google, and what I did mention is the stock it went up by a lot, let it come down a bit, and of course once it is actually down, then you can actually execute your so-called long trades on this Google in anticipation for the what is that stock split which is coming mid of next month. Yeah, so yeah, Google coming back to strong, not strong lah, I mean lows, coming back to its lows. Yeah, coming back to its lows of 2050 here, coming back to its lows. Of course, I would say chances are before Thursday, market can continue to go down. Yeah, market can continue to go down. Once it hits here, if it hits here again, and okay, it's again timing lah. Yeah, you cannot catch the best timing. Yeah, you will not be able to catch the best timing, and it all again it actually goes on. So your so-called expectation on the market, whether these kind of huge declines are actually temporary, like what has actually happened in the past two rate hikes. That post that market will recover a bit after they actually digest the information. Which class? Wani, you are asking which class? Okay. I think which class? The ticker GOOGL. Normally, when I trade it, I would actually trade GOOGL. Yeah. GOOGL is which class? I also don't know which class, A or let me check. GOOGL. That is the ticker. There is there is another one which is GOOGL. Yeah, GOOGL. That's the ticker. There is another class A. Is it okay? You tell me. So I would not. I just trade the ticker GOOGL. There is. I think there's another G, right? GOOG. There's another ticker GOOG. Okay. There's another ticker GOOG which I don't. Which I sorry. Something wrong. which I don't do on GOG. I take GOGL. Oops. So again, like I said, the for this, right, for this, when it actually comes down, to its lows, then of course, if you actually do the spreads, right, the bull put spreads, if you actually do the bull put spreads, it is actually much safer when it comes down, and you don't do it when it's actually on its high. Yeah. Okay. So the other thing is, of course, the not last week, but the week before, we were actually again talking about neutral trades. Yeah, we are talking about neutral trades, and we were actually speaking about Microsoft. Yeah. So this is my last point, because I am following up also on some of the trainings which we did, in the past Traders Talk. And of course, some of you guys may have also looked at some of these positions. And of course, right now, I have not seen my positions, but I think I, I think the neutral trade which I have actually entered in uh, uh, 2 weeks ago would actually be tested on the put side. Yeah, because Microsoft have actually came down, and I believe the price the price of the short put spread is actually about 245, if not mistaken. Yeah, 245. Yeah. So if 245 means that this would actually be tested, yeah, 245, because now it's 242, right? This already be tested. And on the bull put spread side of the iron condor, right, you would actually make the loss. But of course, on the bear call spread, you would actually have a lot of gains there to actually offset. So the losses might be small, but you will tend to actually get into a loss even for a neutral trade. Okay, so for that, right? I mean, there is actually again situations like uh, now till I think the expiry for that was actually 15 July, which is about 31 days. 31 days expiry. So of course, time wise, there is actually time for the trade to actually recover, or go back above the put strike. Okay, but of course, on the call side, I would say, since we have actually gone, I think it was actually a 2.7 2.45, maybe about 2.65. I think we did 2.65 or something. The strikes. Maybe I should check what was the strike I posted. I posted it on Facebook. Last time. On the show the previous week. Okay, let's see. Let me see. 295 245. Yeah. So the short put is 245, and the short call is actually at 295. Yeah. So 295 is here lah. Here. So 295 is here, and we have actually moved down way to two below 243. So in terms of the call side, you probably the extrinsic value which is actually left on the call side would be probably less than $10 or less. Yeah. So if it goes down further, maybe to $5, you can actually close off the bear call spread. That means the iron condor, two sides. You have two sides. One is the bull put spread, which is in the loss, and then there is actually the other side, the bear call spread, which will actually be almost coming to its max profit. Yeah. So what you can do is close that leg. Some people actually roll down the calls, That means from 295, they actually roll it to maybe say 275, 280. Maybe they roll down to 2715, 280. But of course, if you roll down, what happened is, of course, you will actually get another 20 or 30 cents credit. You can get 20 or 30 cents credit. Yeah. But of course, when this price bounce up again, it might again test this side. Yeah. So good and bad. If you roll it down, then you are actually protecting the losses from the what is that, from the bull put spread. Yeah. But of course, if you don't roll it down, then if you close the trade, you would basically realize the profit upfront. Okay. And of course, when you realize the profit upfront on the call spread side, the anticipation is, of course, for the price for this Microsoft to bounce back up above 245. Yeah, above 245. And of course, once it bounce back above 245, again, you can actually also close the trade faster, even with a smaller profit, because you have already made the max profit for the call side. And if you go up slightly into a slight profit position, you actually want to exit, you can also exit, and that will actually give you a faster 50% max profit of the so-called full trade. Yeah, even if it bounces off strongly, then of course the profits will go way above 50%. Yeah. So this is again some trade management. And of course, the other thing is, if you don't go back up, what can you do? If you don't go back up by next week, if it's actually still hovering around here, try to actually roll it over to August, roll it over to August, with the same strike, roll it over for another month. Yeah, to actually buy you more time for Microsoft to actually recover. Yeah. How to roll? Look at the how to roll and why to roll. Look at the newsletter. Okay, so plenty of things which I shared today. I think is actually overdose. Overdose day. Anyway, sometimes we learn more, and now we trade less, and then we take time to learn more. Yeah. Okay, so good session with you guys. We have shared, I think, 3 or 4 things today. I think I will keep some for next week. Okay, so I will see you guys again next week. Of course, in case you guys have any question, by all means, post it on Facebook page. Do share and like our page, so that more people can actually benefit from our shows and the information which we share to you guys. Yeah. So until next week, have a slow trading week. Yeah, don't put in too much position. Let the news and all pass Thursday, and then from there, you can actually look at more opportunities. Yeah. So I catch you guys again next week. Bye bye.